thank you, PineGreen Consortium, for letting me do this project. Thank you, Dr. Asad, for inspiring me and letting me do this project again. So the project was to have a business plan as a deliverable to identify the feasibility and the opportunity to do a business on medical and recreational marijuana. Sorry, only recreational marijuana. So, vision statement: to establish an efficient business operation keeping the triple constraint of cost, scope, and schedule intact with delivery of high quality products leading great customer satisfaction. And as we have discussed, the scope is gonna only be for Los Angeles area. I had done my project in two phases. First, the survey phase, then the business plan. Survey phase was to understand the business and economic feasibility of having a recreational marijuana business setup. So with that, we have analyzed the states where the recreational marijuana is already legal, and with that, we have a go-no-go decision based on the figures that we have discussed. The next phase is the business plan, which we have the deliverables as scope, schedule, budget, risk opportunities, and the planning. The survey document was sent out earlier, and this is a snapshot of a survey. So what we have seen so far is we have Oregon, Washington, Colorado, Alaska, and Vermont, which has already legalized recreational marijuana. And with that, we have seen that we have 393,000 of consumers already in Colorado. And what we have studied so far, and we have concluded that that accounts for 19.50% of consumers currently in Washington, and 19.50% in Alaska, 19.80% in Vermont, 19.90% in Oregon, and 20.50% in Colorado. So with that summing up, if we average out this consumption rate, then we can speculate California to be at 20.04% of average consumption. And if we study the medical marijuana consumption rate in all states, we can see that $2.7 billion of revenue is flowing in, which that we have California contributing 49% of total. And these are the figures coming in. AUMA, Adult Uses of Marijuana Act, proposed in '64. This latest figure says that we have 71% of people saying yes to it, and these are the figures pulled out a couple of days ago, and we have still November coming in all the way 2 months down the line. The deliverable of Pine Business Plan is scope, cost schedule, work breakdown structure, project charter, responsibility matrix, communication plan, and risk management. We're gonna detail a deep dive in a little bit. Okay, so since I don't have a specific statement of work signed off from my consortium, I have to propose first the few phases of my project, and they were categorized into Model A, Model B, and Model C, where we have modularized the entire operation to several areas like cultivation, processing, testing, retail sales, and marketing. And based on few combinations of that, we can have 3 models in place, wherein in Model A, we can outsource first 2 and do the third one. In Model B, do the entire thing on your own. In Model C, just do the first one and the rest on our own. So I have a detailed plan in my lecture, which has a detailed breakdown of Model A, Model B, and Model C. Our focus will be Model B, when we are doing pretty much everything on our own. Cultivation on our own, processing, testing on our own, retail, sales, and marketing on our own. So with this, our focus area would be Model B, and with Model B in mind, if you're gonna see that we do all of our modules by our own self, then we will grow our cultivation, and this production estimate will pretty much drive our cultivation. And this is the breakdown of production estimates. We have a total population in Los Angeles, which is about 3.5 million, and out of which 17% are adults, meaning these are the potential consumers we're gonna target. And if we consider each person consumes about 1 gram of marijuana each day, then we're gonna need about 131 kgs of marijuana on a daily basis. And to suffice that, we would need if we take that into consideration, we would need 786 kgs of marijuana per month to suffice those consumers. And that derives our demand and supply. This is just the summary of what we have seen in our previous computation. The total demand with 20% of sale is about 26 kgs, and the monthly demand is about 786 kgs. And to drive this demand, we will need this supplies, which has about the number of plants required is 1573, and each plant or each unit gives about half kg or 1.1 pound of hemp, which can be taken to the end customers. If we take that into account, an average yield per harvest would give us 786 kgs with 1573 units of plant. And the total area required to facilitate that is 34,478 square feet of area, and this is the breakdown for the total area required. We have plantation, we have irrigation, we have inspection space, and then we can sum up with the total area required to suffice 1573 units of plant. Now, again, if we can produce the same amount of marijuana with the 1573 amount of plant, and assuming everything goes right, we have a Colorado state, the price of Colorado state currently running, which is $206 per pound, and if we're going to use that, we can get a total revenue of $357,404. And with that, I've taken a sample of Denver implementation and I've compared to Los Angeles, and we can have the actual numbers deriving our projected numbers. So the statistics says the total area in Denver is about 155 square miles against the total area which is in Los Angeles, which is about 503 square feet miles. And if Denver is having 11 number of stores to run the recreational business, we would need somewhere close to 35 stores to run our recreational business. And assuming there is an organization called LiveWell, there is an organization which I've again sampled out and I've taken into consideration, which owns 6 stores out of total 11 stores, which has a current market share of 54% in Denver. So with that maths in mind, if you're gonna occupy a 20% share of our total market, we will need 7 number of stores. And this is the miscellaneous estimates. We have slush funds, we have all our utilities and everything, and which sums up to a total of $38,400 annually. We have risk management, which kind of foresees and takes action to the potential threats that we can possibly encounter in our operation in each of the aspects, like cultivation, processing, testing, and retail store. I have them ranked with the probability and the impact, and then sorted based on the highest number of impact to be taken care of first. And this the contingency plans and the mitigation is in the document, the risk management document, which is in the annexure. And with this, we have marketing and sales. So our investment would be on the digital and on the retail marketing per se. To understand the digital marketing, we will need to invest a considerable portion of our investment to the digital platform, because knowing that's where all our business are gonna be in future. We have to collaborate with digital partners like Weed Maps and Uber for Eat to have our stores located in their applications. So if someone looks up shops in Los Angeles, our store would pop up. And what we're targeting is about 40% of our marketing and sales to digital medium, because that's where we can optimize our profits, because the cost of online marketing is comparatively very less through the retail marketing. And even though we're gonna have our retail stores, we're gonna push more initially to the digital marketing, and we keep pushing as much as we can in the subsequent phases of our project. With this, we also have a considerable amount of research and development going on our project. And these are the innovative methods, and these are the product development methodologies or strategies that we're gonna look in sometime. So we can have drones deployed to monitor all our affairs in the cultivations. We can also have innovative methods in terms of irrigation and pest controls. So right now, 40% of the total molecules is known to us. There is 60% of still molecules which is still not known to us. So we can pretty much explore the methods in our labs to understand what else we can make out of those molecules and how can we bring that up into the retail market and push to the end customers in form of infused products. So that can be done in CBD, cannabinoid molecules exploration, and we have the product development where we can research on how we can get more number of infused products right to our customers. And we can balance out the concentration of THC in each product, and the ratio of CBD to the THC has to be maintained for certain products to be rolled out to the end customers. The cost. So with each module in mind and each of their risk statuses taken into account, we have the contingency funds allocated for each module, which sums up to the total cost of $141,355 per harvest. And this is the cash flow which starts with the working capital of $25,329 in the first quarter, and the revenue starts flowing from the third quarter, and the revenue from the third quarter can be input to the fourth quarter, and so on and so forth. And this would be our cash flow in terms of investment, the total of $145,736. So right now the cash flow is not reconciled with the profit and loss statement that we have seen earlier. We have the quarterly cash inflows, which is detailed and broken down to further modules and sub-modules. The profit starts flowing in from the third quarter, and the same as we discussed, the profit from the third quarter will be an input to the fourth quarter, and so on and so forth. And we can have a running capital, and we can start with a working capital of $25,300. The profit and loss is derived out of the total revenue per harvest, given by the total investment per harvest minus the tax, which sums up to $151,234. And this would be a projected growth quarter on quarter, which we have around $250,000 by the end of eighth quarter. So this is a snapshot of all the project deliverables. This is the work breakdown structures, keeping the schedule in mind and the cost and the cash flow in the given stages. So I can show you a small detail of all of that. So the estimates that we're talking about is the cultivation estimate, the product estimate that we've talked before, and this is the detailed breakdown of our cultivation, the testing, the processing, the retail stores, the miscellaneous per year, the total work breakdown structure, itemized, the budget plus reserve, the profit and loss account, and the cash flow. And with this, we come to our closeout, and the end of the project will be having our operation running sound and strong, plus the marketing and sales infrastructure, both on the digital and the retail medium. And with this, this brings out to a delivery of full-fledged operational model for a business plan of recreational marijuana for PineGreen Custodian. Thank you very much.